Hello, what's up, everybody? This is Ruben here from Tenacious Tribe once again here for you guys. Hope you guys are having a fantastic Labor Day. If you guys are in USA, I'm working here from Madrid. I'm living in Madrid, so no Labor Day for me. So yeah, it was boring. Nothing was happening in the stock market. I mean, it's usually boring for me, anyways. I'm just religiously and artistically executing my trading system over and over. It's a boring process. I love it anyway. So yeah, about today's episode on our series of price action, technical analysis of trading assets. I've done this. I've run the price action, technical analysis of this asset already on my website, tenacioustribe.com. But I haven't yet conveyed it to you guys in throughout this media media type YouTube video, so to say. I'm gonna try to make my videos a little bit shorter. I'm seeing a 20 minutes spread, perhaps too much. You guys, when you guys click on these videos to watch what's going on in this talk, I don't think you guys are aiming at such long explanations. So cutting it to the chase. Off we go. And with Ready Capital Corporation, which was the stock which we were triggered to analyze, we're seeing a lot of unusual activity, a lot of interest, a lot of trending signals. And when I opened this chart, it was already ostensible like why the stock was special, and I immediately got triggered. What I'd like to convey to you guys about this stock here. What I see here is a classical textbook, a supply and demand setup. How does it work like? So basically, first you see this. Of course, you can put very weird names and very technical names into movements, technical circumstances, facts, and so on. At the end of the day, all you need to be able to is to recognize these sort of patterns. And when you see this gargantuan down thrust from the bears, this is pretty much the bears telling you, "Hey, I'm here. Hey, we're here. Hey, bear in mind, this is our territory. We control." As of this price range, you should expect to meet us. You should expect for us to take over the market and overpower the bulls. So that's a fantastic clue for us as well, because as of the moment when you see this downward up thrust, or same thing goes for an upward up thrust, then we can immediately set this area as a supply area. This one I've just drawn here. And also you've seen that the bulls stepped up in this market as of this price level here. So you know right immediately as well. This is a demand area here. So why is this called supply and demand setup? Supply and demand. Oh, yet again, recapping. How do you know this is a supply area? The bulls, as shown that they have shown that to us, and as of this price level, when the price hit this price level, I don't care if there was a COVID issue around here. This scandal erupted back in March 2020. We don't care about the fundamentals. It could have been anything. Some other stocks went to the same exact circumstances as this one did, COVID, and they did not display such a bearish, overpowering signals as this market did. So we don't care about the fundamentals. All we care is about the patterns, the candles, the price action, and technical analysis, and that's it. And pursuant to this bearish candle, we can already mark down and state that the bears are here. This is where they're located. Uh, and this, of course, this could have been then as of the moment that we got this downward thrust. Boom, that's it. As of the moment we see this candle happening in this market, we know this is where the bears are. And then yet again, the textbook supply and demand setup keeps on showing up perfectly, because yes, the price retraces back to this supply level throughout the bull market we've been through until June 2021, end of 2020, I'd say 2022, I'd say. So yeah, the bulls retrace back to the bears territory in with slower momentum. I'm betting that I would no there's no RSI divergence here, but still See that these candles are way smaller than this one. So yeah, you can really tell that there's a fewer momentum here in the movement of the bulls, getting back to the Bears territory. And as of the moment that that the Bulls touch the Bears territory, you immediately see that their presence is again being established on the market. Look at this wick, look at this upper shadow, this one, this one, this one here. You see that there's even like a stronger bearish rejection from this level. So this is the Bears saying, okay, we are here, we were here. You knew it already. The price got back to our level, to our domain, to our terrain, and here we are once again. And you're rejecting the price and sending price back to where they think or where their power thinks price belongs. What else do I like about the setup? I would even say we got a trigger already. Like to get this weak, this shadow. We can really draw a support level here, which was broken below back in June 2022 with this gargantuan, very strong momentum bearish candle. Afterwards, there was a previous support new resistance retest with this bullish candle here. And what happened to the price when onset touched once again that the previous support now turned into resistance? We're seeing displays of bearish rejection once again from this price level. I mean, this candle here, perhaps even this one or this one could have already been triggers for a short trade. This one could have been a trigger for a short trade already as well. Stop loss above this threshold, because you know that if the price pierces above this threshold, then you know that the bears are not so dominant as we thought they were, and the bulls are actually dominant in this market. This market is once again giving you another opportunity to enter for a short trade with this retest and confirm this confirmed retest of the previous support new resistance. Furthermore, what else we got here? Another bearish signal here is like this death cross here. We see that fast EMA is crossing below the slow EMA. This is like another bearish sign, another bearish trigger. So yeah, target perhaps this area here, the demand zone. We don't know. We don't know if this market has like a bullish prospect for the future. So even this level could be like a nice take profit for at least half of your position or half of your profits. Um, Aside from it, what else do I add? I mean, I want to keep this very short, of course. But yet again, I'm showing you a short setup for a stock. This is, please bear in mind, it's very important. This is not something I like to trade. I don't like to trade stocks short. This one has a very nice setup. I prefer this sort of setups when you see it in currencies or in Bitcoin or in cryptos or in currencies more than any of the others. But stocks over the long run they trend to go up, as you can see if you pull like S&P 500 chart throughout the last 150 years. Uh, so the odds are not stacked on your side if you keep on shorting stocks. The odds are stacked on your side as a trader or as an investor if you buy stocks long. And furthermore, the second reason why I don't like to trade stocks is because from a risk to reward perspective, I can at best win 100% of my capital if the company goes bankrupt, which is difficult. 98, 95, 100%. So at best, 100%. That's what I can gain. That's my reward. And at worst, I can lose theoretically infinite amount of money because the stock can continuously go up and up and up and up and up and up. There's no ceiling for a stock. So yeah, theoretically, of course, it's difficult for this scenario to come to reality. But yet again, this is not sort of a setup I like to. A third one, of course, is that short trades are leverage trades. I trade on a monthly time frame. I don't like to ask for money borrowed to hold for an average holding period. My strategy asks for 17 months. I don't like to borrow money at expensive rates, which is usually what you have to pay for to borrow money from your broker in order to short stocks. This is not something I really like to do. I like to keep it like very lean, no leverage. I like to keep it like on a long term basis, long term perspective, time horizon. This is really not my thing. But if this was a currency, which of course, you have the same arguments of leverage and all that. But this is like really a textbook supply and demand pattern, and Best worst case scenario. I mean, if you like me, don't like to trade long, use this example for an idea on how not to trade long. Or if you're, for instance, looking at this stock and thinking of buying it, perhaps this might be a good perspective for you guys to perhaps reconsider your position or take into account other circumstances or facts that you're not uh, envisaging in your initial analysis. And I mean that's all I got for you guys. Usually 20 minutes. I want to keep this very short and appealing to you guys as much as possible because this is technical. This is difficult. I know it's very difficult to convey it like in a catchy way. Uh, but it also ought to be this way. I don't want this also to be too much attractive for too much of a beginner trader. I want you guys to know a little bit more about what you're doing here before you can understand or fully comprehend what's going on here. I mean, I don't want to be here and telling you to short this stock when you might have no clue whatsoever about risk management rules, system trading, system building, uh, psychological management, everything. That's why I mean I'm not too reluctant on using like more complex um, language or jargon, so to say. Um, in any case, use it to create hunches, use it to create ideas, to build your own system and to run your own numbers. But always be diligent with risk management with your decisions. I'm not a CFA holder. I'm not a financial advisor. I'm a practitioner. I've just been stacking a lot of mistakes over the past 4.5 years, 4 years, and doing a lot of things wrong, repeating them, testing others, getting more hunches, seeing more charts, more and more charts, a lot of charts. And eventually I started making less mistakes and seeing what works and what doesn't. But I'm not a financial advisor. If you're thinking on buying or selling the stock, my advice would be for you guys to consult your financial advisor, or of course to be diligent, bring your craft, start running numbers, start reading about trading, start learning about price action, technical analysis, fundamental analysis, if you will, and try to ascertain if it's something for you or not. That's it. That's all I got for you guys. Happy trading. Careful trading always. Market is very dodgy, so to say. Yeah, it's very volatile right now. I think it's still in a bear market. The worst is yet to come, but we never know. Be diligent. Be careful. Do not overtrade. Keep your risk management rules with the utmost respect, and that's it. Cheers, guys. Thank you for watching. Cheers.